Um, when most beginners start trading, they only focus on the charts and they study candlesticks, support, resistance, supply, demand, market structure, and all of that. And there are other parts to understanding why the market moves the way it does, aside technical analysis, and that's fundamental analysis. So, firstly, you're wondering what is fundamental analysis. Fundamental analysis is just the process of analyzing economic, financial, political factors that affect or influence the value of currencies and other financial assets. That's what fundamental analysis is. It's just the process of analyzing economical reports, financial reports, and all of that category that I already stated of the market, currencies, and other financial assets. So instead of focusing on only price charts, which is the charts that we just do, which is technical analysis, instead of focusing on just that, you should be able to look at what's happening in the real world and how this can actually affect the market. Because yet again, the market consists of us, individuals, traders, so investors, which means whatever our sentiment is, whatever is happening outside reality, would also happen to the market too, because these are traded by people that live in the society, and then everything that affects the society will affect them, and that will also affect their decisions in the market. So which is why fundamental analysis is very, very important and should be taken serious. Now you're wondering what's the difference in fundamental analysis and technical analysis. Technical analysis focuses on price charts, market structure, candlesticks, support, resistance, demand, all of those things. That's trend analysis. Those are all technical analysis, while our fundamental analysis is economical data, interest rate, inflation, employment, central bank decisions, geopolitical events. Fundamental traders study the reasons behind market movement. Do you understand? So you're wondering what factors affect currency prices. Some of the most important include the interest rate, inflation, employment data, economic growth, government policies, political stability, consumers' confidence, and trade balances. These factors shape how investors view an economy before investing, which is why it's important that we put them into consideration. The role of central banks is it is one of the biggest influencer on the forex market because it's the country's bank. So it manages monetary policies, and their decision on interest rate and inflation can have a major impact on currency prices. It's a bank. It has to do with currencies, money. Money is currencies, and we trade currencies, and that's what forex is about. So when traders expect central banks to change interest rate, the market often reacts before the announcement is even made, which is why, as when I said, when the society, and it's important that we also look at reality because those can affect the market. That's it. Now, the positive and negative side of economical news is imagine two countries. Country A reports strong employment, low inflation, steady economic growth, and country B reports high unemployment, weak economic growth, economic uncertainty. Generally, investors may have more confidence in country A's currency because it's stable and the inflation is low, there's steady economic growth, it's stable. So investors will always go for stability, what they can predict, what they can trust. As an investor, you don't just go and start putting all of your capital out in the open for nothing. There has to be solid reasons behind those risks. Do you understand? Which is the reason why, in my illustration, investors will choose country A because of its stability. Now, why currency? Why fundamental analysis matters is it helps you understand long-term market decision. It prepares it prepares you for unexpected surprises. Yes, it prepares you for unexpected surprises. And as a beginner, intermediate, an advanced trader, it doesn't matter. Should you ignore fundamentals? No, absolutely not. Many people do because they feel like, oh, it's a lot. I have to like carry my chart on one hand and then um, my fundamental analysis, I have to put that into consideration on the other hand. And they just find it to be very overwhelming. It happened to me when I first started trading. Some days I would check fundamentals, some days I wouldn't because it just felt very overwhelming, but no more. Now it's a lifestyle. It's what I do every day. I wake up every day and I'm looking out for fundamentals. I'm looking out for news that could affect a country, and that if that country gets economy gets affected, how it could affect my trades. I'm always looking out for that. My charts, I just visit those charts once or twice because once I do my general analysis for the week, for the month, it keeps me true. So I don't really spend so much time analyzing the market, but I spend my time now looking out for fundamental analysis, which is as a beginner, intermediate, and advanced trader, fundamental is very, very important. And you also, like I said in my last video, you also have to know high impact news so as to not overcrowd yourself with unnecessary ones. Now, when you combine technical analysis and fundamental analysis, um, think of fundamental analysis like explaining why the market moves, and technical analysis help you determine where, when the market is going to move. That's just it. That's the conjunction. The fundamental is the why, and technical is the where and when. And this combination together will actually give you a clearer path in your trading journey. And some of the common mistakes that many people make is ignore economic news. They trade during major announcements without preparation. They believe charts are all that matters in trading, and that's not true. And most people don't say this enough, but it's not even true. Okay, you need both. You need both. You need to understand both are very, very important and have their own value in their own ways. Now, before you start trading on daily basis or whatever, ask yourself, is there any important economic news today? Is there anything I need to understand? How is it going to affect the market? You have to always be prepared. Always be prepared. Okay? You have to always be prepared. Fundamental analysis helps traders understand the economic forces that moves the market. So when you combine technical analysis with that, it provides a stronger foundation for making informed trading decisions. And that's it. So do take it into consideration and combine fundamental analysis with your technical analysis. They're both important. They are both important. I will not put one over the other. They're both important. And yeah, that's it. So don't forget to subscribe, like, and share. And I'm going to drop the link in my description like I always do for a broker and for the charts, which is for TradingView and for Exness. Exness is the broker. They're very great brokers. So I'm going to drop the link in my description. Do well to make use of it. Do have a nice day. And you can always watch and watch over and over again so you can comprehend what I said. And if you have any questions, do ask in the comment section. I'll be more than glad to answer them.